तिथेच अडकलो आम्ही. झालं. चलो कंटिन्यू करू. येस मला काहीतरी बघायची.
Good morning, everyone. This is Vinay Jain, your host for the day. I am pleased to welcome each and every one of you to second day of Income Tax Ki Pathshala, organized by Vikasa of WIRC of ICAI, jointly hosted by Pune Vikasa branch, Ahmednagar, Anand Bhavnagar, Pune, Kolhapur, Navsari, Pimpri Chinchwad, Sangli, Sata Road, and Thane branches of the Vikasa of ICAI. Not everyone likes up getting early morning and attending a session, but I'm glad that dedication of learning some practical insights of income tax has pushed you all here to attend this Pathshala. Before proceeding further, I request everyone to stand up for the motto song.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
I request CA Rajesh Agarwal sir, immediately past chairman of Pune ICI, to give opening remarks.
Good morning, friends. Sorry for delay. Today is very important. Second important topic with respect to computation is concerned, exemptions under capital gain. When I studied exemptions, we used to follow this one chart of 54 and like which exemptions are applicable for short-term capital gain. We create some key, a shortcut key. These are for short-term capital gain and one key for long-term capital gain. Just to remember which exemptions are applicable for which capital asset, whether long-term or short-term. And again, there is so many conditions in each exemptions. You can sell one asset and buy another asset. Only this asset you can buy, only that asset you can purchase. And so many complications are there in computation. And each client selling something, buying something, and there is taxation with respect to capital gain is concerned. and is very important to understand the conditions and the provisions in detail. And we have learned faculty of today, Narendra. I thanks Narendra for accepting our invitation. Really thank you. When Pranav contacted Narendra, he, irrespective of the day and topic, he accepted our invitation. Thank you. And I also thanks Vikasa and all of you for this participation and organizing. Thank you.
I would like to introduce you all to our guest speaker, CA Narendra Joshi sir. He is partner at MP Chitle and Company. In past, he has worked with Ernst & Young and PricewaterhouseCoopers in assurance and direct tax, respectively, and there he gained 14 years of experience. Not just that, his experience and key strengths also include accounting services, business setup advisory, international tax in connection with transfer pricing advisory, and evaluations. He has also been part of IBC committee of ICI for the year 2021-22 and direct tax committee of ICI for financial year 23-24, and also empaneled as a reviewer on tax quality review board of ICI. Now I would request CA Rajesh Agarwal sir to felicitate CA Narendra Joshi sir. Now I request CA Narendra Joshi sir to take charge of the session.
Yeah, good morning, all of you. Thank you, Rajesh, for introduction. So since we have few participants, so let us start with this session. Since we are very few, I will request all of you to come forward if possible, because I believe maximum learning happens when you're sitting in the first row, and this is your opportunity to rise and shine, ask questions, and probably make maximum out of this. So anybody who has worked on capital gains before? Quick show of hands. Two. That's it. Anybody else? No one has worked? So this is going to be interesting. So this is what we are going to cover. If time permits, we'll also cover other, practical aspects of capital gain. Yeah, so let's start with basics. 45 provides that any profits or gains arising from transfer of capital asset. So what is the condition here? Transfer. So what do you mean by transfer? And let us try and make it interactive. Otherwise, I'll get bored if I only talk. And I'm sure even you will not be able to make anything out of it. So what is transfer? Google करते हैं? Yeah, you don't Google. Or do you do that, or you go back to your books, or maybe faculty guide, whatever you get? How do you identify? How do you identify what is transfer, what is capital asset? So that is one aspect, small subset of the section. So any section is going to throw up terms to you, okay? To understand those terms, you need to go back to section 2. That is something which defines, some of the key definitions, or maybe provides explanation on certain key words which are used in almost all sections. And then there are certain other sections or maybe jurisprudence which will probably give you more insights about that particular word. So if you read word transfer, there are transfer in relation. So I'm going to read this for you. Transfer in relation to capital asset includes sale, exchange, relinquishment, extinguishment of any rights, compulsory acquisition, maturity or redemption of ZCB, and many more. Okay, and then there are explanations. So it practically covers anything and everything under the sun. If there is a transaction where there is a consideration getting exchanged, or there is a barter of assets, or anybody can give me practical example of barter of asset, which we see on a day-to-day basis when we travel around the city. Classical case of barter in capital gains. I have a plot of land or a bungalow. I give it to a developer. Developer is going to give it back to me in terms of constructed units, or maybe units plus cash. What is it? Nothing but barter, right? So whether it is capital, whether it is transfer, answer is yes. It is covered under this section. Then for capital asset also, there is a definition. Then for every definition you will have case laws, and this is how one should try and understand. So whenever you are working on any capital gains case, whenever your principal is going to give you any case for computing capital gains, your first thought process should be how to identify which asset you are talking about, whether there is a transfer, what is the consideration, what is the time period, which financing you are talking about, which assessment you are talking about, and then go to computation, then identify if there are any complexities, and then obviously I'm sure you will have books, you will have taxable subscription or taxable subscription. Try and make maximum use out of it, because you will get a lot of keyword search based case law which will help you to identify the real impact and also compute capital gains for your clients. Yeah, so this is how typical capital gains computation looks. Full value of consideration, then you have expenses incurred. So again, quick question here, slightly unrelated to our topic. If you are a company engaged into a portfolio management service, or if you have appointed a portfolio management service firm, you have a large treasury and you buy and sell into shares, equity shares, okay, of listed companies. Then what kind of expenditure you can think of which will be allowed as deduction? And obviously PMS, the portfolio manager, is not going to work for free. He will charge you some percentage fee, and you will also have a carry. So what is carry? Carry is nothing but share in profits. So whether it will be allowed as deduction or expenditure, or whether there is any other expenditure which can be claimed while computing capital gains. Quick thoughts? Fine. Anything on PMS fees? Do you think that it will be allowed? Yes. Okay. Rajesh is saying yes. Anybody else? Students, please speak up. You may go wrong. It's okay. Absolutely okay. We are here to learn. Everybody is learning. So I expect answers. Any from this side? You understand what is PMS is? Portfolio management. You have a treasury sitting in balance sheet. You cannot keep it idle. Obviously, we all are chartered accountants. As auditors, we only suggest कि भाई इससे कुछ करो, invest करो, try and make maximum return out of this. Then client will get smart. He will appoint somebody. They will start making money on that. So what do you do? What do you do with PMS? Think about this. We'll come to this later maybe. Then net consideration, cost of acquisition, cost of improvement. Again, cost of improvement. Very debated issue. When it comes to capital gains or from sale of residential property or maybe a land, this is going to be the most important area where there will be a lot of dispute. For example, let us assume that Mr. A has purchased property in 1950. He will inherit it to his son. He will pass it on to his sons and daughters. And then they are now going to sell it after, let's say, 70, 80 years. And over a period of time, they have done a lot of improvements on the property, including constructing house property, demolishing it, again constructing it. So what is it that you are going to get? Whether entire expenditure incurred till date will be cost of improvement, or cost of improvement related to the sale of asset or making it sellable, or ensuring that the property appreciates in value? Again, I'm just going to throw questions. If you don't answer, I'll continue and you will be on the losing end. But I expect you to interact, stop me. Anybody want to, wants to contribute to this cost of improvement in case of capital gains, typical case of land and building, entire expenditure. So grandfather constructing the property, his son is demolishing it, reconstructing the property, and say history repeats. His sons and daughters also going to reconstruct it. Those two validations are not there right now. What you are going to sell today is a newly constructed property already 25 years back. So whether you will get the entire cost. And what about 2001 indexation reset? So that is the answer. What grandfather did is not material. Reset to 2001. Consider cost after that because law is very clear. Anything before that you cannot consider. You have to take a stop and then recompute. Okay, clear? So this is the only section which is going to evolve. We keep evolving because in the rest of the corporate law, corporate tax, especially business side, the complexity has gone down substantially. Capital gains and your probably some areas related to special entities. There is still enough juice left in the direct tax, but this is one area which is going to probably be more complex in future because as we are dealing with a lot of new instruments of new capital assets and their transfer, and then what happens to that, and then cost of improvement, all those things are going to be relevant. So you have to understand basics and also how the mechanism works. So this is how the long-term capital gain looks like. Same. Anybody on the classification of short-term and long-term when it comes to shares, equity shares, listed? What is the treatment? When do you determine whether it is long-term or short-term? And what if the company is selling shares in IPO, offer for sale, and on the date of sale, on the date of listing, you are getting money, right? The money is credited to your bank account on the date of sale. What do you do with that? Whether it is long-term, short-term. And if you have acquired pre-IPO, just 6 months before the IPO. Okay.
It is written 12 months.
But why not 24 months? Because on the date of sale, it is still not a listed share. Anybody from this side? Property, what about property? 24 months, 36 months, what is the current rule? 24 months. Okay. Yeah, so we will try and cover key exemptions under 54, not everything, because everything is not possible, and these are the only sections which are used on a day-to-day basis. In fact, 50D, 54D is not applied, on a regular basis. The rest of them are used on a quite frequent basis. So this is what Rajesh was talking about. Create a chart, okay, and also read a book. Chart is not enough because the sections are evolving on a day-to-day basis. There are case laws coming on every day. Hence, it is important to be mindful of what is there in the section. Chart will help you to finalize that, get you to 90% of the work. Remaining 10% is going to help, it depends on your preparedness. How do you work on the subject and how do you research? Okay. So 54, applicability to HUF, individuals and HUF who have earned long-term capital gain from a sale of a residential property. So the key here is residential property, individual and HUF, only those categories are allowed. When 54 will be allowed, invest in purchasing or constructing a residential house property located in India. So what happens if property is outside India? What happens if the property which I am selling is outside India and I'm buying a property in India? Why no? Why yes? Anybody? Because there are a lot of Indians who are now owning assets outside India. At least we deal with a lot of cases where individuals, traveled abroad, stayed there, acquired citizenship, acquired assets, renounced citizenship, came back to India post-COVID, all good. earning rental income, and now they want to sell a property, and the property is appreciated substantially over a period of time. What do? There is a capital gain, right? Forget treaty part, forget double taxation, what happens to tax credit, that is a separate issue.
First have to check residential status.
So let us assume that the person is, I simplify, let us assume person is resident. He is renounced citizenship of foreign country, reacquired Indian citizenship, staying in India for last 5 years, 8 years. What happens? And there is a property in UK, US, or some other country.
Property should be in India. You can claim exemption if it comes this concept. But the property which is sensitive in India.
Exactly. Apple.
Exactly.
So earlier, so we come to one case law. This issue is covered in subsequent slides, and we will discuss that. But if there is a property outside India, if you sell it, if you bring that back to India, consideration and invest in a residential property. If you don't have a residential property, what do you do? See, the intent of these sections is to grant a benefit. These are all beneficial provision. There is a purpose and there is a literal text in the section. One has to decide, what is applicable and why this section is there. Why do you think government is saying that buy residential or property? Commercial, forget income tax. Somebody is trying to speak. Infrastructure is beyond residential, but yes, to boost the demand, that's what you want to mean, boost demand for residential property. Also to ensure that every individual will have a house to stay, and that house will be exempt if the person is investing money, correct? That's the intent. So they are trying to balance demand also housing need, and trying to give exemption. And if there are any issues with respect to technicalities of the section, then courts have been taking liberal view, because since it is a beneficial provision, they have to take a liberal view. Not that you do anything and they will grant you that benefit. It will not happen. But if you are on the line, if you have missed deadline by few days, few months, then there have been instances where courts have been generous enough to grant that benefit. And we'll come to that in later slides. Yeah, so what is the amount of exemption, amount of capital gain earned, tax amount invested in a new residential property? Time limit is within 1 year before or within 2 years after sale, or construct a residential property within 3 years from the date of sale. So let's take practical example again. Okay. So if I'm buying a house property, let's say I'm going to sell my, I have let's say many house properties, I'm a wealthy person, and I'm going to sell my house property, and there are multiple family members owning 1 or 2 assets. Am I going to really plan my construction of house property or purchase of house property based on capital gains? Whether it is possible in reality, there are multiple issues, okay? And builder is the biggest issue. Timely construction and timely possession of the property. So what do I do if my intentions are good? If I fit within the framework what is given under Income Tax Act, but there is a delay on account of some issue which is beyond me. Builder is not able to complete the property, or there is issue with FSI, or there is some problem at the site, unforeseen circumstances leading to closure of site. What happens in that case? And all good intentions, I have invested money, I have parted away with consideration. Let's say agreement to sale ho gaya hai, say LED spending, the property is yet to be registered, stamp duty is not paid. What will happen in that case? Whether this benefit will be still allowed? Who is saying this? Okay, why? But yeah, idea में कैसे बताओगे?
So till that time, I think you can.
No, you're right. You're right. I'm on next question. How do you report this? What do you do? No, that's fine. Contractor action, that is fine. All those good provisions will definitely help you and take you out of the mess. But income tax officer is going to work based on data analytics platform. Okay, he will simply apply a rule, say that you are not fitting into the condition, property is still not complete. I don't see this information from Register of Assurance, whatever information they extract. okay, stamp duty payment or registration of property, there is a mismatch. I'm not going to allow you. What do you do? In ITR, you have seen the form, extremely complex form, simplified complex form. Okay, how do you report this? So the answer is try and maintain communication with your builder. Have official way of communication. Don't call him, मेरा घर कब मिलने वाला है. Don't take WhatsApp it. Okay, write official letter. Send it to him by registered ED. Create enough noise about it. Form a union. Go to RERA. So at least circumstantial evidence will help you to get the exemption. You can prove that whatever was possible from my side, I have done it. If the case is beyond me, and why this is relevant today, because immediately before this current real estate boom, there was a overhang of demonetization. Okay, there was overhang of GST, and a lot of builders suffered heavily during this time, and also IBC came in. So everybody was, trying to put them down, and they were not. Whoever was not efficient enough, they did not perform. Some of them perished. Some of them did not fulfill their promises. So what happens to people who have invested their hard-earned money, claim 54F or 54, and not able to get possession within the timelines which are given under the Act? What happens to that? Okay, so you will see a lot of these cases starting this year. If you are not handled during the course of assessment or while filing ITRs, these cases have started coming up now because promise failed, NCLT case, somebody acquired that builder, construction restarted 3-4 years now, and now they are giving possessions. So we start getting these cases now. So it is important to have, documentation on record, because whenever you will be faced, you will be facing income tax department, and now it is faceless. Okay, so you don't know who is talking to you, what questions he is going to ask, how that person, he or she is going to, make up his mind based on information which you are going to give. So it is all the more important to have a proper communication trail, so as to justify what you have been doing and your position is right. Yes, you were saying something. Clear? Okay. Anything on this? Any question? 1 year before. So again, interesting point. Let's say I have a bank account. Let's say I have two bank accounts. One saving bank account, one account with my wife, and I deposit capital gain proceeds in one bank account, joint bank account, and use money from my other account to purchase a new house property. Whether I will be allowed exemption under 54? Why? Let us say I am within the limit of 6 months or 1 year from the date of or up to the date of return. Let's say I am within the limit, and I have other savings also. Let us say fixed deposits. So I have enough cash. Cash meaning bank balance in my bank account. What happens? So let us tweak this further. Both accounts are joint accounts, and I interchangeably use them. Why? Why is to help you think about this section and come up with possibilities which will either put your client into problem or save. That's the reason I'm asking why. Why? Let's say I have only one bank account. Let's simplify it. Okay. I withdraw my deposit, fixed deposit. I have money in my bank account. My sale deed with respect to residential property is done, but I'm yet to get a consideration. Okay. And we have agreed, mutually agreed. कि बाद में दे देना, कोई problem नहीं. And in the meanwhile, I use my fixed deposit proceeds to buy a house property. Because there is a time limit. I'm worried about time limit. And I have to make sure that I don't lose exemption. What happens? And I replenish funds back to FD when I get it from the buyer. So clear scenario, there is a house property, I'm selling it. I'm going to sell, sale deed, delayed consideration. Forget commercial angles. I am handing over possession. Payment I'm going to get after 3 months. And in the meanwhile, to make sure that I don't miss timeline, I invest into another property, use my savings. So in the end, what is happening here? We are actually thinking about utilizing the money which was generated out of sale proceeds and investing that money into buying of another property. And practically money has no color. Once you deposit into bank account, it is going to be one and the same. And if there is a commercial reason for not getting money within time, and there are case laws also, which will allow you that benefit. If you are not receiving the consideration, how do you invest? There is a practical impossibility, right? So I can use my savings, and we have been successfully getting, 54 exemption, where there was a delay in getting considerations, and the savings were deployed to acquire a capital asset, residential house property, and assets were successful. So every case is going to throw up challenges, because every case is unique, like all of you, everybody is unique. So your transactions, your cases, they are also going to be unique. Limitations on number of properties. Claim the exemption for sale of only 2 residential properties in their lifetime, provided the long-term capital gain does not exceed 2 crores. So why this section? I'm not sure if anybody of you have read the case laws before this amendment. Ceiling or number of properties. So this is typical English, interpretation. The section was worded in such a way that there was one interpretation that if there are multiple housing units, then still 54 applies. And there was a landmark judgment, I think, from southern part of India, wherein this issue was discussed. The lady got 8 house properties, and everything was claimed as exempt under 54. It was allowed also. Then government became intelligent. They brought this provision, and now initially it was 1. Now they have 2, because again they have to boost demand for housing in India. And they know there are a lot of affluent Indians sitting in tier 2, tier 3, tier 1 cities who are willing to buy more house properties, create more demand, create more inventory in market. So that's the reason this. So when this amendment came, real estate companies shot up on the market, hoping that there will be a good run in future. Okay. Utilization, if the cost of new property is less than NTCG, so taxpayer will have to pay. So this is simple, if you don't utilize, obviously balance will be taxed. Conditions on transfer, if residence property sold within 3 years from its purchase. So this is like rollback. So what government is saying, if you claim exemption, it is fine. You cannot sell it. So don't flood the market. Don't keep playing with this provision. Otherwise, there is no point in granting a benefit. And that's the reason 3 years lock-in. So other important point, it is important to note that it applies only on sale of residence property and not commercial property. So what is the bifurcation between residential and commercial property? How do you determine that? Okay. If let's say I'm using my house property, I've given it on rent to a chartered accountant. It is apartment. There is no need to convert that bill into a commercial bill as per the norms. Okay. And what I'm generating is income from house property. Because for house property, anything and everything falls under house property. It means there is a commercial space, proper commercial space, where there is no residential unit or there is no residential setup also. And if I'm not using it for my own business purpose, section 23, 22, all those sections house property related, everything by default falls under house property. So is there any correlation between income from house property, what is categorized under income from house property, and house property for the purpose of 54 or residential house property? So it is very clear. I am not confusing. Residential house property is only covered. Rest is not covered. Okay. And the other one is residential house property. Apartment given on rent to a chartered accountant is still residential, because you can always prove that the setup is residential. The entire building is residential. You have been occupied commercial spaces or maybe given it on rent. That is opportunistic. Being opportunistic, trying to make maximum out of the available space. That doesn't mean the character will change. That is right. Tax. But sometimes even that thing is not there. Even if the property is rented out, people don't convert corporation tax. They still pay normal tax. Till the time corporation people don't come and knock their door. Typical real scenario. Yeah, so let's start with cases, few case studies. Assessee sold property in invested capital gains for purchasing agricultural land, which was to be converted into any land by a builder. Assessee was entitled to receive property from a builder. Assessee also paid for the new property to the builder. AO denied exemption on the ground that new house property was registered beyond stipulated period of 2 years. So, you have understood the case? This lady was going to buy a property, rather she bought a property. It was agricultural land. It was agreed with her builder that builder will convert into any non-agriculture. Okay, otherwise you cannot construct. He will build something on it. She will also contribute, and then builder will pass it on to her, and then she will claim capital gain exemption. So what do you think? What must have happened? And I'm sure there are, there are many other things in this case law. But these are the high level facts, and these are good enough to at least understand or think about this, what can happen. What court has held is different. We'll discuss that also. But what do you think? How will you handle this situation if it comes to you? What will be your arguments? Anyone?
It's a good strategy. What effort she has taken.
Correct.
Right now we have discussed.
So Rajesh has already he has given you the hint, leading you to the answer. Anybody wants to attempt? So obviously circumstances will decide if the intention from day one is to convert that land into any land, construct the property. Obviously that lady will enter into some MOU, eventually development agreement. Builder will pay municipality fees or state government fees if those fees are applicable. Then they will start construction activity. Then they will face with delay. Those delays will be also on record. And then there is intention to invest and buy a new house property. If there is a delay beyond assessee's capacity, then exemption cannot be denied, and court has granted exemption in this case. Next, assets sold immovable property and claimed exemption under 54. AO completed assessment under 143 and accepted the claim. CIT observed that assessee did not deposit money in capital account till the time of utilization of proceeds. Whether failure to deposit proceeds is a hyper-technical view adopted by CIT. And this is not my word, hyper-technical view. Yes. Tribunal has said. So this is what we discussed initially, right? Whether hyper-technical view is something which is possible under these sections. Anything of that said? Why do? What do you think about this? So this is not related to saving. There is a capital gain. Money is already in my bank account. If I don't utilize in a prescribed time limit, then I have to deposit money into the capital gains account scheme with a bank. Then bank will make that payment to a builder or to a person who is going to construct it. So bank is holding that money in trust. And income tax, so AO allowed it. CIT said that no, you have missed the bus. If you don't deposit, I'm not going to allow you. That is the question, whether CIT can take this view. And what will be the quantum of delay which will be permissible? If I sit on it, if I don't invest and ask the investor after 5 years, then I'm not meeting basic conditions, 2 years, 3 years. But if I'm on the borderline, 1 week delay, 2 weeks delay, or a month delay. So here, I think what view was taken was that assessee could invest money before filing a statement of income. Admittedly, there was a delay in depositing or using the proceeds, and the money was not deposited in capital gain account scheme. Still, the benefit was allowed because court has said that it is hyper-technical view, where there is a beneficial provision allowing assessee to purchase property, residential property, use proceeds, then you cannot, stop even from claiming exemption just because there is a delay by, few days or few weeks. That's what court has said. And it is, the transaction was complete before return filing. So not that it went beyond that. Okay. Assessee received consideration from surrender of tenancy rights. So this is other category of asset, okay, not a regular house property. Invested amount in purchase of new house property. In ITR, instead of 54, a very interesting case now. Assessee, so why 54? Why 54? Why not 50? Normal 50, 54? Why 54? Why not 54? And vice versa. This is the question, okay. So you have understood the case? So there, assessee was holding tenancy right, transfer of tenancy right. This is typical Mumbai case, staying there for many years, generations, and now the building is going for construction. So you have a tenancy right in the property, beneficial right. Builder is going to pay some consideration for it, and either consideration will be cash or by way of exchange, new house property. If you get a cash, and you invest that money into another house property, what happens to that? So in this case, assessee incorrectly, instead of 54F, selected 54 because 54 talks about residential house property. And this is tenancy right, not necessarily a residential house property. Even though it is right in the property, but it is not a residential house property. The category or class of asset is different. So again, hyper-technical view. During assessment, assessee tried to correct the mistake which AO contested, stating that it amounts to a fresh claim. So what is fresh claim? So I'm doing something in ITR, declaring something in ITR. AO will start assessment. During the course of assessment, what I will do, I will realize my mistake. I will file a letter with AO saying that I have made a mistake. This is what I should have done, and this is the explanation for my mistake. Kindly allow me this benefit. So this amounts to a fresh claim. And then now there are many, case laws which have defined this fresh claim. What constitutes a fresh claim and what is not a fresh claim. So this issue was involving multiple, angles. Whether 54F 54 is interchangeable. Okay, answer is no. Whether change of section, only technical section, everything was right. Money was deposited, money was utilized on time. Idea was filed on time. There was house property. Assessee was eligible. It was only section, it was, incorrectly selected while filing the idea. Somebody must have made a mistake, genuine mistake. So whether it amounts to a fresh claim, anybody? So I've explained to you what is fresh claim. Fresh claim is something where you are saying something for the first time. It is not part of the idea. And a mistake and a fresh claim are two different things. No, it's not a question. Correct. Because it was a mistake, because assessee must have filed affidavit saying that I was supposed to select this section. I am eligible to claim this exemption. I have met all the conditions. It is just that while selecting section and while filing ITR, incorrectly 54 was selected instead of 54X. So court had allowed this, stating that
In my view, 54 years is for the whole consideration you have to deposit
correct,
in proportionally.
correct. So that condition was met.
Whereas in 54 is for the capital gain.
Yes.
Only you have to invest capital gain.
Right.
So it is always better to take the benefit of 54 instead of 54 year. Tenancy, if it is a tenancy rights in the residential property, why not to claim it as a residential property? Because as per
So right in the property and property, that is the debate.
yeah, in my even constitution, as per the constitution article, immobile property includes the rights involved in the immobile property.
Correct, tenancy right, long-term tenancy
Yeah.
right, perpetual lien rights.
In that view, this tenancy rights in the residential property is also a residential.
So this view is also possible, but this was not considered in this case particularly because they pressed for this change of section during the course of assessment. It was granted.
It is a case of fresh.
Fresh claim or pure mistake. So they should have actually filed a letter immediately after filing ITR stating that this mistake has been committed. We request you to rectify this. And then it will lead to assessment. Whether AO will listen to that or not is a different story. but this is something which, creating evidence, bringing information on record, official record, and creating a case for your assessee or your client, so that when it goes to court, tribunal and above, you at least have something to say and some record created. Otherwise, courts are not going to grant you exemption just like that. There are instances where court will not even give you benefit if you don't pray for it. So what do you mean pray for it? You have to actually put a grounds of appeal, justify that, and put a prayer. If you don't pray, they will not grant you. Same is with GST also. Same is with any international tax also. If you put a claim, if you don't say anything about it, they will happily close the matter. Dismiss the ground. And how do you do that? You create a history. So work starts at, I always say work starts at article level. A person who is junior most member in your team, who is taking a lot of burden, who is doing a lot of work, that person is actually going to decide fate of your client. Okay, because anything is missed at that stage, it is very difficult to catch it up later on. Obviously, there is a role of senior or director or a partner to review and also make sure that documents are checked before those documents are filed. But a lot of work happens at the article level. You interact with client, you get access to information, you do basic workings, you come up with questions. So your mind should always ask this question, why and how. If you don't understand this, if you don't raise this question, probably nobody will be able to pick it up later, unless your principal or your director, partner, manager is spending enough time on it. And it's not their mistake. This is how the work happens, because this is distance learning course. Practically, CA is distance learning course. You learn, at the same time you earn, and also make some good experience. Rajesh, you can probably.
Yeah.
Because there is a consensus that CA is like a classroom training course, and this is how it should be done. So less importance for apprenticeship, more important for classes. That is important, but it is a distance learning course. If you don't work, you will not be able to do anything post your qualification. We've seen many examples.
Classes are only spoon feeding. It will not clear exam.
Correct.
Whereas if you perform well in your articleship, you can clear exam in time.
And make maximum out of every opportunity. You get capital gain case, you read that section, exemption, transfer definition, ratta. Okay, and that is the end of it. You don't have to read it again, because your brain is capable of absorbing information and bring it back whenever you need it. So when you appear for exam, you don't have to study it again. If you approach your work with this mindset, your hard work during final exam or IPC exam is going to go down substantially. This is what I tell to my students also. This is how you should approach it. That's what I've done.
I have never just worked sections. Still, I can say the.
Because nobody can remember that. Like Rajesh sir is saying, nobody can remember sections. That's the reason I'm carrying this book. I have asked for it because even I cannot remember. I know where to look for.
Yes, that is important.
But remembering book is next to impossible. Of course, there are some wizards who know sections by heart. But those are exceptions, far and few examples.
Yeah, but
Not everybody is like that.
Cost of acquisition. If we know the definition is there in 43, we can open 43 and just refer to how it is applicable in our.
Correct.
But we must know the 43 is for the cost of acquisition, and we have to refer the definition.
Make an attempt to read it. Open your Income Tax Act. Make an attempt to understand that section. Try and cover whatever is possible under or within the peripheries of that section. That will make you technically stronger. And you never know, same thing will be asked in your CA interview, campus recruitment interview, and then it will place you. You never know. One technical reading can help you in some other way also. It has happened with people. Yeah, let's move. Next case, assessee non-resident sold immovable property and purchased property in the name of a spouse. Okay, again interesting case. Claimed exemption under 54. Assessee was in UAE at the time of the registration of documents. AO disallowed the claim under 54 on the ground that investment in house property was not in the name of assessee. Whether 54 will be allowed. Now, I think you should be able to answer. We have discussed enough. We have discussed non-resident, we have discussed non-resident claiming exemption in India. Who can invest, who cannot invest. Okay. Not understood the case? Not understood. No. Yes. Answer? No. What will happen? People will laugh at you. Let them laugh. Doesn't matter. You will learn something in the bargain. Wife is outside India, husband is in India. एकदम opposite case है. Usual नहीं है. Which is good. You should have these cases. Otherwise, how do you understand how the law functions? Yes. Continue. Anybody wants to anybody from that side want to attend? No exemption? Speak there. He's very clear. RCC? Yes. Yes. She is not there, so her name is also not on the registry. Index to पे नाम नहीं है. So court was very conservative when they granted this exemption on the ground that since she was not physically present, it was impossible for her to be present in India at that time. And the intention is to allow assessee to purchase one more house property. And the understanding is that if husband is buying, she will have access to it, and vice versa. भाई ने लिया तो नहीं मिलेगा. Obviously, they will have some documents MOU वगैरह करेंगे वो. Consent तो रहेगा ना. If the marriage previous consent is always there. Correct ना? That's what they have done. Moving on to next 54B, capital gain on sale of agricultural land. Any questions on 54? Should we move to next? Yes, no. Silence is no. Yes. 54B. Again, applicability in individuals HUF or individuals parents who have earned long-term capital gains from the. So there is a typo. Anyway, forget that. So the applicability is individual or HUF or individual's parents. So why parents? Because parents are using it, the individual is inheriting it by whatever reason, and now individual is transferring it. But individual is not doing agriculture activity consistently, and I think the period is 2 years. It's not there on the slide, but it is 2 years. If the agriculture activity is not consistent enough, then individuals will not be denied exemption because his parents were doing it. These are the parents were doing it. Okay, that's the idea. Use of land for agriculture. So what is agriculture activity? Again, a debatable issue. What constitutes agriculture activity? And how do you prove it? Anybody who has agricultural land? How do you justify that you are growing crops? What do you do? Which crop you are doing? Sugarcane is simple. Patti येते झालं. Anybody else? There is one is fine. How do you justify that there is crop? 7-12 beyond 7-12? 7-12 you will have peak पाणी वगैरे सगळं नोंद. 8चा उतारा? Correct? In some other slide, maybe some other document. Correct? What else? Create documents. If somebody is buying produce from your place, have credit in your bank account. Have some chitta. Get it signed from the person who is buying it. And justify that you are doing agricultural activity. Don't take photograph. It's of no use. Because our AO is smarter. It will access satellite data and try and take out information. They have done that in some cases. They have gone to that level to identify whether the land is really used for agricultural activity. And with technological advancement, this data is available. Even we don't know, but this information is available. It is regularly surveyed. Why they survey? Why they are surveying this information? To identify crop pattern, to identify demand supply mismatch. Okay, information for a lot of fertilizer companies, also climate impact, food security. So they are doing it anyway, and information is available already. So OM will have access to that information, and you have sophisticated photographs which will even tell you which crop is on the field. So nobody can lie. Okay. So this is again very important. Agricultural activity has to be justified. You have to have records to prove that agricultural activity was carried out, and then only this benefit will be available. What is the quantum of exemption capital gain earned of the amount invested? Time limit within 2 years from the date of transfer. Utilization of exemption. If the cost of new properties, so this is standard. Let's keep it. Rollback is also standard. If you sell it after, so why this rollback is relevant? Again, who is owning land or who has seen multiple land transactions in the family, broad family, friends. In villages, this is quite common. Okay, I will sell a land which is my interest property and buy another land 100 kilometers away. Again, sell it after 5 years because in 5 years property appreciates. Again, sell it and keep repeating this entire my life. And people have been using this exemption to churn out their capital gain. Okay, after every 5 years, after every 10 years, and they get immense benefit out of this. For a classic example, you have a Nanded city near Pune. While going to Srinagar, you must have seen it. Okay, people used to do agricultural activity on that land. It was urban agriculture land. Okay, and they sold that property and used those proceeds to buy land in some other remote location in multiples of acres. And now we are getting cases where people are selling those lands also because industry is reached there. Now there is MIDC, property appreciate, price is now great. So we keep churning this, but the condition is 3 years. You cannot get into trading activity with agricultural land. Okay, that is not possible. It is important to note that it applies only to sale of capital asset being urban agricultural land. That's the reason Nanded city example, because it is within the Pune or Hadapsar or Mandri, Undri. Everywhere you will see there are agricultural lands. All are within PCMC limits. People are doing agricultural activity on that, and if they buy another agricultural land, it can be urban agricultural land also, or it can be normal agricultural land, non-urban, real agricultural land. Okay, then the benefit is available. Yeah, so case assessee sold his share in a joint family land used for agriculture purpose. Later on, assessee purchased new agricultural land in the name of his wife and claimed exemption under 54B. Whether exemption would be allowed if the investment is made in the name of another person. Here it is tricky. Anybody? Based on what we have discussed so far? Bahadur Singh, right? Yes, anybody? Why? Same principle. It's not so simple. Life is not so simple. Yes. So I'll give you more facts. 4 bhai the, 1/4 share. He sold his 1/4 share out of the ancestor property. His share of consideration deposited in his own bank account, he used it to buy another agricultural land in the name of wife. So forget remaining birds, not relevant. Pick up. मिलना चाहिए discuss. Yes. And this is Supreme Court's decision. This lays the law of land. But that is lower court. This is Supreme Court. Hmm? 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 So spot on. Convenience is not allowed. If there is a genuine reason which is stopping you from buying that property, or there is some reason beyond your control, and it is a necessity, then it is fine. But if you are buying it as a matter of convenience, then it is not allowed. And in this, it was rejected. And there was one more case law, CIT versus Dinesh Verma, Punjab and Haryana High Court. And if you all can see, this is the only judgment, 4 lines. Dismiss. That's it. Dismiss and get out. Almost get out. Only 4 lines, nothing else. So there was a delay in filing appeal. It was controlled graciously, but the exemption denied. And in 4 lines, relying on another judgment of Punjab and Haryana High Court, because they know that Supreme Court is aware and they are very intelligent people. If they pass something, if they grant a benefit, it will be used rampantly. And people will start buying this convenience. They will start using it anywhere and everywhere. And the section will lose its. That is what I am able to come up with. This is the only story. Even if you challenge me, I will not be able to answer. This is the only logical explanation, as you rightly pointed out. You cannot convert convenience into exemption. Okay, so this is very important. Next, assessee sold land used for agriculture purpose in which we had 50% share. The assessee purchased another agricultural land which and claim 54B. They also knew that land was purchased on or before the date of sale, and hence exemption under 50B of that was denied. Denied is missing anyway. Whether exemption of new agricultural land purchased on before sale of agricultural land is allowed. Whether it's possible. Before selling, I am buying agricultural land, or on the date of sale, I am using my time. I am saying that I don't have time for to come to registration office. Let me do registration on the same day. Yes. Here the some of the critical points of this ruling are not there on the slide, and which you should ideally ask. This is what I am trying to do, since we started pushing you to ask questions to yourself or to the speaker or to your principal. When did he purchase the land? From where did he arrange the money? Whether it was switch payment, one-shot payment, what about the sale consideration which he was going to get, how it was invested, and what are the dates. So the entire case actually turned on these events, since there was some advance received and balance payments were in stages, and also with respect to sale, there was part consideration, and hence assessor was able to prove that the remaining consideration is paid afterwards, even though the registration has happened before the sale, and hence the benefit was allowed. Again, the intent is to allow that person to buy another agricultural land, not to kill his agriculture activity. That's the reason the benefit, and it was not convenience. It was, I think, clear enough from the information which was submitted before the tribunal, based on which they have categorically said that benefit will be allowed based on these things. So again, you will not need to copy paste the scenario in some of your current assignment or future assignment. Like I said, every assignment is going to be different through a lot of challenges. Okay. Let's go to 54F. Applicability, individual HUF who have earned LTGC from sale of any long-term capital asset other than residential house property. So any asset other than residential house property. Sale proceeds must be invested in the residential house property located in India. Located in India, very important. We'll come to this. Purchase one residence property within 1 year before or bidding. So standard condition. Okay, 1 year before, 2 years after, 3 years construction. No change. Amount of exemption. So as Rajesh rightly said sometime back, here it is say net sale consideration. Slightly stricter provision. They want you to invest entire sale consideration. In 54, it was only capital gains. So proportionate capital gain. So if there is a gap between capital gain value and consideration because of cost of acquisition, it is going to cause hardship to the assessee. Understood? Everybody has understood? Can anybody explain? Re-explain? If everybody is saying yes. Clear or not clear? So it depends on the spread between your cost and the gain. If the gain value is, if the spread is decent enough, if it is a recently purchased property, let's say post 2008 boom, where prices were skyrocketing. Let's say properties in Gurgaon, further premium, and now you are selling it, okay? And the difference is not much. What do you do? So this section is going to cause hardship because you have to invest almost entire consideration. Otherwise, you don't get the benefit. Conditions. If the new residential property is sold, so typical rollback, 3 years में बेचा, वापस लेके आऊंगा. Simple. Assess your two properties and claim exemption under 54F. PO noted that new building consisted of mosque, orphanage school, staff quarters. Assesses, and it was a 3 or 4 story structure. Assessee submitted statement before municipal corporation that third floor was used for residential purpose to regularize the construction of the property. So this was, I think, before Hyderabad municipal corporation, after Hyderabad municipal corporation. So the property was there. Assessee constructed building on that. He started probably, trust related activities, mosque, orphanage school, all good. Okay, all good up to this point. There are some irregularities in the construction activity, and then there was to and fro between the municipal corporation or whatever development authority and assessee. And assessee had claimed that third floor is used for residential purpose. Okay. Then when case came to AO said that this is not 54F because this is not a residential property. What you're doing is commercial activity. And then assessee said that, by the way, I'm staying on third floor and I've already submitted documents to concerned authority to regularize the said property. So based on this, what's your view? 54F, whether it will be allowed or not allowed? Assessee was very smart enough to structure this. Yes, anybody? Progressive view. Anybody else supporting? Anybody supporting her? Raise your hands. You have few friends. Remaining, why not supporting her?
That's it. Full exemption should be received.
Ideally, life is not so simple. Yes. Even the cause is good. Cause is really good, but the court has taken a different view. It was not granted, not even to 1/3, because the intent was missing. And then there were a lot of gray areas. And something which was created during the course of submission, probably. I am not the right person to comment on that, but when you read the judgment, you understand a lot of things are coming in coming to the surface during the course of hearing.
The use is not important. The property should be residential.
From day
But
one.
I am buying.
Intent is money. If I'm buying a residential property, later on using it for a mosque corporate school, then probably view could have been different. Rent it for nominal value. Still it is a residential property.
Yeah, that is my point.
But the intent was different, means it was not a stricter view. Okay. So if you keep swinging, very strict, very liberal, midway, thoda de diya, thoda nikal liya. Okay, this is what is going to happen. Next, assessee sold property in India and bought property in US, claiming exemption under 54F. Assessee mistakenly deposited excess amount further twist in capital gains account scheme. So what happened? This is very interesting case. Assessee sold property in India. Probably he was US citizen, means he was willing to take this money out of India and buy property probably where he was living. And there was a delay in using the funds, obviously, because there are a lot of formalities one has to complete before taking money out of India. And assessee deposited the money in capital gain account scheme, but it was in excess of what was the requirement. Assessee invested also. I think assessee invested in this case, and later on applied to withdraw the amount which was lying in capital gain account scheme, which was in excess of what was required. And during that point, AO found out. Because when you withdraw, you have to give entire documentation. If there is excess money lying in the capital gain account, कब deposit किया, क्या property लिया, क्या value था, stamp duty value कितना था, registration कब हुआ, you have to submit everything, satisfy you to the last point. Only then he is going to allow you. He will write a letter, you carry that document to bank, and then bank will transfer that money. Extremely complicated process. It takes a lot of time. Okay. So at that time you found out, and you said, I'm not going to accept 54F. So what's your view? So this is pre-amendment. Position before 1 for I think 15. इसके पीछे गया है वो. But 1 for 15 के बाद, the condition is property has to be bought in India. You cannot buy it outside India. So I think this is we discussed at the start of session. So assume that law is still like this today. You are allowed to buy property. What should happen? 54 if allowed, not allowed, allowed obviously. If it is there, correct? But in this case, it was, I think it was allowed to the assessing. Yes, it was allowed. Let me check quickly. Yeah, it was allowed. So technically, assessing what was doing was right. 1/4/15 के पहले whatever position was there, assessee was within his rights to claim. Capital gain excess deposit was something which was, something beyond his control, and it was allowed. But what can lead to another issue and how it will spiral into something else, and will force your client to submit a lot of information. This is the classic example. One issue leading to another and getting into something else. 54 EC, investment in certain bonds. It applies to all assessees who have earned long-term capital gain, sale of immovable property, land or building. Maximum amount is 50 lakhs per financial year in a subsequent financial year altogether. Only specific bonds. The investment in eligible bonds must be made within 6 months from the date of transfer. Okay. Eligible bonds. So this is locking before 1 for 83 years. After that, 5 years. How much interest you get on 54 EC bonds? Anybody? अरे यूट्यूब वगैरह देखते हो ना, इसके ऊपर बहुत होता है. इन्वेस्ट करो कैपिटल गेन में, कूपन, रेट ऑफ इंटरेस्ट, IRR 5%, 5, 5.5, 5.25. Correct, Rajesh? Yes. So this is the coupon you get. So if any assessee comes to you or any client comes to you, let's say your brother is selling a property, his brother or sister is selling property, generating a lot of capital gain, and part of the amount is willing to invest in 54 EC bonds. And if he comes to you and say that, मेरे को cost benefit analysis करके दो. If I pay capital gains tax and invest this money into stock market or simple mutual fund with low risk, what happens after 5 years? If I don't pay capital gains tax, invest this money into 54 EC bonds, earn 5% interest on that, and after 5 years I get to withdraw. So buying independence on day one by paying tax, independence to use the money, and not buying independence. Slightly off the track, not something which you will see in the section, But this is what your clients are going to ask you. This is the real advisory. And you don't have to take decision. You have to simply give scenario. If you do this, simple, present value, correct? 50 lakhs invested today, 5% coupon over a period of next 5 years, present value, consider 8% discounting. What you're going to earn is going to be nothing. Your capital will grow. And what is the benefit? You're actually not paying tax anything on day one. Okay, but if you pay 20% tax today, let's assume flat tax of 20%. Okay, and you invest that amount into, let's say, mutual fund, conservative mutual fund, generating 12% return. The money will compound. Present value will be far more greater number than the first option, even after considering capital gains tax payment. This is the real value for your client, right? This is what client is going to pay you for, not to compute capital gains. वो उसको clear tax में मिल जाएगा. In the era of technology, computing capital gains is not going to be difficult. Anybody can do it. But creating that scenario, applying your finance knowledge, applying your SFM, SFM का knowledge or securities knowledge, okay, and creating options or scenarios for your client is something which will be valued. And exemption is there. You can claim it, you don't claim it. Absolutely okay. So this is one way of looking at the same, which practical way I will say. May not be right, okay, considering the topic. Yes, next. Have we left everything? Assis sold assets on 16/12/12, invested sum of 50 lakhs in RAC bonds on 31st/3/24, and another sum 50 lakhs on 36/20/14. So 1 crore. What is the limit? Again, smart assessing or smart chartered accountant or article. Okay. 50 lakhs, those are within the, and both within the limit. One immediately after 3 months, within the same financial year. Another before filing of return of income, again within 6 months of the date of transfer. And 6 months meaning British calendar month. You have to count it months. Okay. AO contended that Assis is allowed to place only once and hence disallowed 50 lakhs. Whether 50 plus 50 should be allowed or should be restricted to 50 only. Yes. No exemption. No exemption. वो यूपीएससी करने वाला है. हाँ. Okay. Those who are supporting her. Because nobody is speaking. Huh? Exemption. Yes. So it was granted because it was per financial year, and one financial year was ending on 14, another was ending on 14/15, and it was allowed. Very peculiar case, very few cases on this topic where double dip is allowed. Okay. No, but per financial year, no, this time it was not there. Processing claim and they got it, we got away with it. But you are not allowing in full. You said no exemption, not in 50. Assets is sold property on 3/8/2 and made by investment under section 64 EC, but with 2 days delay. So whether he will be allowed 2 days delay. And this is slightly different case. I will come to second line, but let us understand whether 2 days delay is crime or not crime. Not crime. Should be allowed. Okay. 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 Anybody else? Negative bolo please. Huh? So it was allowed. Only the facts were different. Since he tried to file, application for continuation of delay under 119. Initially, there was no time limit for applying under 119. Now it is, I think, 6 years. If you don't apply within 6 years, you don't get it. So एक बार छूट गया ट्रेन 6 साल में अगर कुछ नहीं किया तो परमानेंटली गया. But at that time, it was not like that. So after we filed that application, it was pending. Department did not hear or did not pass any order on that. And then in between, amendment came that now there is a limit on 119. And then income tax department took a view that कि अभी तो time limit आ गया, we are not going to do anything. But court said that when the application was filed, there was no time limit. And hence it should be allowed. And it was allowed only with condonation of delay. So condonation is folded hands, approaching AO, saying sorry, I made a mistake. Today it was because of this reason. Somebody was hospitalized or whatever. Submit facts or submit proof, and then he will allow you. AO is like a king. Okay, he will sit on a high chair. You have to go with folded hands. Otherwise, you don't need anything. And rightfully so, because you don't know who is approaching and for what reason, and whether it is real condonation, real delay, or there is some other fabricated reason. So it was allowed in this case. Says he sold house property and invested money in purchase of should have been new property and invested in fixed deposit and claimed 54 EC. Simple, unanimously rejected, should be rejected 54 EC. Or anybody feels that नहीं थोड़ा conservative हो जाओ दे दो. Should be rejected 54 EC. Yes, it was rejected. 54D, section which is not used so much. So we have 15 minutes left. Applies to all assets who have won capital gains from compulsory acquisition of capital asset, being land, building, or any right in land. So any right in land and building. Slightly different wording because the intent is different. Purchase of any other land or building. So this section is to make sure that if you are using a land or a building to do a business activity, and for whatever reason government is taking that land and they are giving you another land, or you are required to sell that land, you buy another land, then that benefit is extended, because the idea is to ensure that your activity is not interrupted and you get to enjoy that exemption, because capital gain is going to be a cost. If you have to construct one more property, the commercial or business property, it is going to cost you, right? The tax cost goes from your pocket. That is the reason. Okay. So intent is very clear. Utilization has to be for the property used for the undertaking. Okay. So other important point, capital asset should have been used for the purpose of business of the sale and rate. So this is precondition. On the date of sale also it has to be used. So how do you prove that? Whether property used for business or not? Oh, this is challenging. There is no record to prove that you are doing commercial activity. शेड बना दिया, अंदर कुछ नहीं है. सैटेलाइट आएगा, पिक्चर लेगा, शेड दिखेगा, अंदर कुछ नहीं है. How do you prove that? Use for business activity is more important. कैसे prove करें बताओ? If client comes to you, he has a running factory, let's say 5 factories, 3 of them are not functioning, 2 of them are functioning. Out of remaining 3 non-functional, he's going to sell 1 and planning to claim this. When he comes to you, without a benefit, I want this exemption.
Documentary you can create. I am storing some goods there.
How do you do that?
Sir,
So think out of the box.
Additional place of business done.
Additional place of business, e-way bill, your lorry receipt, date register, there are 100 things. But one has to maintain record and prove that you are actually doing business. Otherwise, you are going to lose this benefit. Okay. So quick summary. Exemptions, investment in 1 or 2 residences. So I think this is between, because heading is not there. Investment in bonds. So this is between house property and bonds. Okay. And I think we have already covered almost all points. Yeah. Only the point is capital gains or cost of new house maximum 10 crores. So what people used to do, people used to buy villas, 100 crores, okay, 200 crores, with a lot of vacant land or maybe agriculture land, and used to be a farmer's property, but still it is a residential property. So put this basically taxing high net worth individuals and beyond that. So they brought this limit beyond 10 crore के नीचे सारे गरीब है. That's what government feels. ठीक है. So importance of exemption in capital gains, tax planning, provide opportunities to eliminate tax obligation profits earned from sale of capital assets such as property, stock, bonds. Inform decision making regarding investment choices. We spoke about 54 EC. Going for 54 EC, not going for 54 EC. Again, for residential house property also, if I'm owning one property, I have to buy one more property. I have excess money. Let's say I've sold one property and I have a decision to make whether to invest in the residential property or pay tax and use or get freedom to use it anywhere. How will I justify? How will I decide for myself? कैसे करोगे? Commercially, how do you do it? Finally, it comes to boys of that, right? There is real money at stake. How do you do it? Simple cash flow plot करो. कितना इन्वेस्ट होने वाला है, वापस कितना आएगा. You are not going to use that property. We obviously do it on rent. Rational decision. Okay, rational decision. Rental income is going to be between 1 to 3%. 1 to 3% over a period of next 3 years. 30% standard deduction tax rate will be at 20%. Okay. If you pay tax 20% on the net consideration of net capital gain and invest in somewhere else, which is going to generate more return. So for residential property, it will be 3% up to 3% rental ROI plus 5 to 6% appreciation over a period of life of the asset. So 7-8%, 9% maximum, max 9%. So if any asset is giving you more than 9% and also taking care of your upfront capital gains tax cost, then second is a better option. So this is how you should ideally be analyzing it rather than taking a emotional decision exemption or zero property. No. Consider market situation. If the property market is in boom, there is a possibility that you will pay 20-30% extra for the property which is not worth that much, which is the scenario right now. There is so much positive in the market. Everybody is claiming 30% premium, 30 to 40. I am not sure how many of you have heard this. There was a sale by DLF in Delhi. They sold some 1100 units in 2 days and garnered some 7,500 crores from sale of flats, lottery. There is so much demand that people are buying properties worth 7,500 crores, almost $1 billion in 48 hours time. And they are coming up with new projects. And one apartment costing 7 crores. So this is the boom, where everybody is mad about property. So do you really consider this as a student of chartered accountancy or a chartered accountant? Should you actually advise your client? Then it comes to decision making, creating scenarios, pros and cons, and then let your client decide. Finally, eventually. Okay. Next, ensure compliance with tax laws, regulations, potential pitfalls like unnecessary tax liabilities, penalties. Don't be over aggressive. Don't do shopping of exemptions. Convenience के लिए wife के नाम ले लिया, brother के नाम ले लिया, wife taking on husband's name. That's not possible unless there is a real issue. For business involved in asset sale or restructuring activities, knowledge of capital gains exemption is very important. Slump sale, sale of shares, all those things are relevant, or unit used for business purpose. Do we have time? It's already 9:25. 5 minutes. So slump sale, anybody who has dealt with slump sale? Why I'm covering this? Because this is other than individual. Most of the cases this will be related to a running business unit. So what is slump sale? Putting all assets together, liabilities together, and if it is a running business activity, the word is running business activity, then it can be considered as an undertaking, and that entire undertaking can be transferred as it is to new different entity or to your group company also at a price. There is a rule 115 UAE which defines how the price should be computed, computation of fair market value, and that transfer is treated as capital gains. Special section, special computation formula Everything is different. You don't apply other section. And then there is a long-term, short-term. You need to use for 36 months undertaking, then it is long-term. Lower than that, it is short-term. So the logic is important. What constitutes an undertaking is important. How do you transfer it? And the most important factor is you don't break consideration at asset or liability level. Okay. It's a bargain purchase. Everything put together, assign a price for that. Don't go, if you go to individual asset, it becomes capital gain. If it is depreciable, short term. If it is other than depreciable, nahi hoga, but long term or short term, depending on holding period. Okay, so the beauty of this section is allows transfer of business from one entity to other entity. And then important points now, how do you compute sale consideration, FME, being cost of acquisition. So again, interesting part is again not related to the topic. For the acquirer also, it brings a lot of efficiency. If the unit worth 50 rupees, I am buying for 100 rupees. Why I am buying that? Why I am paying that additional 50 rupees? Can you really depreciate goodwill after 1/4/20, 20 or 21? फिर क्या कर रहे हो? क्यों पे कर रहे हो? Think. Yes. So there is a perceived value. You have to call it something else. It's not goodwill. Then you have to identify that intangible asset. Get into the identification activity. Apply your accounting knowledge. If you are following Ind AS, do purchase price allocation. If you are doing normal accounting standard AS14, merger related, amalgamation merger related, then identify intangible asset. Identify a valuer who will help you to value those intangible assets, and based on that capitalize. This view is possible. So slump sale not only gives benefit to the seller but also to the purchaser, and tax break on the potential excess value paid, even though goodwill definition is amended. So benefit still remains. Advantages, I think we can skip this. Compulsory acquisition is also fine. Joint development agreement, 54 5 years. So this is something which is discussed on a regular basis. You know, property, joint property hai, bungalow hai, residential house property hai, and then it is going for redevelopment. And typical period is builder बोलेगा ये थोड़ा upfront रख लो, ये मैं एक फ्लैट दे दूंगा और ये एडिशनल फ्लैट दे दूंगा और मुझे 3 साल लगेंगे कंप्लीट करने के लिए. And he will also give you rent for 3 years. How do you compute capital gain? So this was one issue which was debated, discussed. There are a lot of judgments to and through both, swinging in both directions, extremely negative view, extremely positive view, neutral view. But then they came up with, you know, change in the act itself. And now what the position today is, capital gain will not be taxable till the time you don't get completion certificate. On the date of getting completion certificate, whatever money realized or credited to that date, plus real estate becomes your sale value. Okay? Yeah. Takeaways. Understanding the basic, I think this is, we can skip this. Or fine. Okay. Any questions? Confused? More confused? Yes, no? Confused, na? So there has to be confusion. Otherwise, it will not trigger the creativity. Okay, thank you. Thank you all.
Thank you so much, sir. It was such a well-delivered tax content as well as an interactive session. Now I would like to call Miss Sneha Ved Patak, newsletter head of Pune Vikasa, to give vote of thanks.
नहीं. थैंक यू विनय. इनकम टैक्स और इतने सारे उसके सेक्शंस और रूल्स, थोड़े लोग बहुत खुश हो जाते हैं सुन के, थोड़े लोग दुखी हो जाते हैं. सब लोग है इधर, बट जो दो सेक्शंस में होंगे खुश होंगे या फिर दुखी होंगे, बट दोनों का कंफ्यूजन आई होप खत्म हो गया होगा और सबका कॉन्फिडेंस थोड़ा बढ़ गया होगा आफ्टर दिस वंडरफुल सेशन बाय CA Narendra Joshi sir. Thank you sir. Special thanks to our Vikasa team and branch staff for organizing such a successful event. Thank you, Rajesh Agrawal, sir, for being here. And thank you, everyone.
Now I would request everyone to stand up for national anthem.
Vikasa election submission date is last date is today. If anyone is interested for Vikasa, you can file for today.
आज शाम 5 बजे तक आप फॉर्म सबमिट कर सकते हैं सब लोग। आपको एक ब्लू पिंक टोकन दिया गया है तो उसका इस्तेमाल करिए, जाके नाश्ता करिए।
Breakfast is available.
Yes.
Istemal